I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was little changed last week, but to say that with a straight face borders on the absurd. It was actually a week that had some of the wildest swings seen in years. Stocks had a weak start on Monday as techs got slammed. The prospects of the Fed tightening into a recession was just too much for investors, and they sold that group very hard. But the last hour saw a 96-point rally and a huge reversal in the S&P 500 as dip buyers came in, and the market ended with small gains. On Tuesday, the market firmed on bank upgrades as some of those beaten up stocks started to get bids, and Western Digital helped the market go up on a potential spin-off, and that rallied 12% on that day. Wednesday, well, that was Fed Day, and the market went off the crazy scale. S&P 500 chopped on both sides of even, waiting for the Fed announcement. And then when the announcement came, stocks wavered at first and then exploded to the upside. S&P 500 got up 130 points, the Dow up over 900. The FOMC came out and said they were raising rates a half a point, as what was expected. That brings it up to 75 basis points to a full point. But they will draw down their balance sheet more slowly than expected. And starting in June, that would be $47.5 billion of balance sheet reduction per month for 3 months, and then going up to 95 trillion. I said billion, 95 billion, correct? And that would be for the following months. And if you calculate what that looks for over the next more than a year, that balance sheet reduction is only $1 trillion, and they would have a year from June following that, still an $8 trillion balance sheet, which is extraordinarily high. Well, investors at first thought that was dovish, but then when they looked again on Thursday, they might have thought differently about that. They did take 75 basis points off the table. And when they did that on Wednesday, the squeeze was really on, and you saw a market really chase stocks on the upside. But then Thursday, when reality hit, the bond markets got slammed again. And thinking about this FOMC policy mistake that they've made, that I just heard somebody say that Powell actually admitted that. I really never heard him say that in those words, and the FOMC, of course, has completely blown it in here. Well, the 10-year, they move up to about 3.1% at the peaks, and Thursday, the tech stocks got annihilated. It was a huge trap for them on Wednesday, and they sold them off very hard. The worst levels that we saw in the stock market on Thursday, and they didn't recover much off of those, were the S&P 500 down nearly 200 points, the NASDAQ down over 800, and the Dow down 1,400. It was a huge slam on the downside. And as I said, only kind of minor recoveries that came off of those lows. Friday, we saw a 3.6% unemployment rate, which of course gives the Fed tons of room and tons of reason to continue their course of raising interest rates. Friday, those unemployment numbers knocked the bond market down again, and here at midday, the bonds have not really recovered very much. Stocks followed through on the downside early. The S&Ps were down 70, and then rebounded up to about up 10. This is a wild time right now. and then they began to retreat. So again, here at midday, we're looking at the S&P down about 30 on the day, but strap yourself in because this is going to be a wild time. The market actually is acting in a way where it looks like selling is getting tired. I know, very hard selling that you've seen, but then it stops and the buyers begin to come in, and that's really what the market has looked like all week long. And prices in the stocks, they do look cheap. So for the stock market, this is a time that it is thrashing wildly, and often that's a sign of a short-term trend change. While the market does look horrible, an analysis suggests that it's groping for a bottom, the bigger picture is a lot worse, and I'm going to show you a lot of that. But before Thursday's drop, the S&Ps did jump as 240 points in a blink, and I think more of that actually is coming. We'll show that in the stock market analysis coming later in the show, that there is more of this rebound in the offing. And we'll also show the huge risks for stocks into late summer and fall. For nimble traders, this is your bonanza time, but you have to widen your parameters and make your size smaller. Then you'll be able to deal with these really wide swings and catch some of these for very huge profits. Investors, this is the big crush, and this was only the first wave. Stocks this week, and I say this with a chuckle, that the indexes are unchanged to slightly lower. The bond market, 30s, well, they lose about 3 points. The 10s gain about 22 basis points. And the high up around 310, though they're trading a little bit lower than that right now. And a rebound in the bond market also is overdue. Bond market down about $10, maybe a little more. There was a very good rebound. And I'm going to show you more about the gold market coming in just a few minutes. The silver market down about 20-something cents, not all that bad. And the analysis I'm going to show you in gold also will hold for silver. Dollar, after trading up to 104, ends up with some slight gains, trading right now about 103.28. And oil gains nearly $7 on the week, getting up to our first target around 111. It's about the Eurozone and their sanctions on Russian oil that's likely coming. And then there are inventory and supply issues. So our range for the upside was 111 to 116. Now we got up to about 111. And we think that 116 is probably coming in the next week or two. Coming up, there'll be a preview of a member video, and Ivy's going to give you a lesson on short-term swing trade setups. And he's going to do that looking at Boeing stock. And I am going to give you a what we call a quick pick in the gold market. And then we're going to show you something brand new. Though I know a lot of you like to scroll forward and jump right to the stock market analysis. But look for the special preview that we're showing now, and Matt's going to show you the Futures Hub. This is an amazing addition for our members for easy access to so much of our futures analysis, and Matt's going to show that to you. And then I'm going to give you some deep analysis on the S&P 500 as we begin to rotate the different indexes that we show you in the in this show. So make sure that you do go to the askSlim website and explore. Look at the things that we have in there. There is so much. Become a free member, get our notifications. On YouTube, subscribe to the channel, click the notification bell, and you will know when we put up videos. Like this video, give us a thumbs up, and that does help us. Twitter, follow us at askSlim. Who knows what Twitter's going to look like when Elon takes over. And for questions on anything that I show you, anything on our huge offerings of education and analysis, Matt can help you with that. Write to Matt at askSlim.com. This is a preview of a member video. We do this every other week where we show our members, actually give them lessons on short-term swing trade planning. And there are usually between 10 and 15 different symbols that we show that on, and then we bring you one of those here so you can get a good idea about that. These videos are part of our member video library, of which there are more than 600 videos in there. And this is on Boeing, and you're going to get a good idea about our strategies of how we set up swing trades, and Arvi does a great job on this. So take over, Arvi.
So Boeing has been in a negative pattern ever since we broke this key weekly cycle low at 183.77, and we have not been able to pick up our head, with every rally failing really where it should and then rolling down. What's happening here is we're still in that same mode. We could get a bit of a bear flag to form, very similar to what happened here, or what happened here, or here, or here. Every one of these was a bear flag, and you can see everyone turned down on the downside. So watching for a flag to form on the weekly, and then lower prices here once more. Looking for a move down to this 129 area into the mid-July to late August time period here. If we switch over to the daily chart, again, looking at this as a bear flag, you can see our slim ribbon PO here is very close to triggering a bearish signal. Here you can see the last one was right here. You can see that bearish signal in the context of a negative ribbon, and then just a massive move on the downside. What happened most recently? Bearish ribbons, bearish signal on the PO, nice sell-off. So we're really watching for something similar to happen. Our zones are a little bit higher than where we are showing some modest failure versus here, but the zones come in from 161.30 to 166.5. If this were to get back over 172, that would render this idea no longer valid, and looking for a move back to this short-term 100 here at 142.36. So that's the overall picture here in Boeing. The next key short-term low is due 513 to 520.
All right, great job, Arvi, on that. I hope that the people got a real good sense for how we approach short-term swing trade planning. This is my quick pick on the gold market. I'm going to look very quickly at weekly cycle analysis in the gold market. This is a gold chart, a weekly cycle chart. For those of you that are brand new, this is going to look very busy to you, but it has tons of things in here of great value. Our analysis is made up of three components: cycle analysis, momentum analysis, and what we call swing high, swing low, support, resistance, and projection analysis. For you to get a good idea of what we have in here, you can see in here on the bottom the cycle brackets, and this big gold one is what we call the dominant cycle. There's an intermediate cycle right in here and a minor quarter cycle. This gray dash right over here is actually the silver cycle that you can see in there, and it does line up with the gold market pretty closely. So when you get 1, 2, 3 of them coming to a bottom, you get hard selling, as you see right here, and then they lift off on the upside. When you get 3 rising, 1, 2, 3, you get big upside gains. This one took you from 1666 up to 19 and change. So that was a quick $250 move right over there. And you can see right in here where they nested and all bottomed right in there. Well, that set you up for a rally from about 1450 over 2000. So you get an idea where we are right now. I'm going to zoom in this really quickly, and you will see that these translations and configurations that we're looking at in here are setting up a move to all-time highs. I want to put that where you can see it. And what we're looking at is 1, 2, and 3 cycles all coming to a low in here. We have been talking for months and months about this time frame, and that come the second half of the year, and that's what we showed in our beginning of the year analysis, was the best time and likely to move up to all-time highs. This momentum in here is negative, so it needs to get repaired, and that likely is going to happen. You can see what it got into the fib confluences this week and rebounded, and our downside projection in here was 1857. This support over here is 1836, with a possibility of getting down into the 1700s, but now it really looks like that possibility is disappearing. One more little quick look of a little bigger picture in here. And we have these sync troughs right in here on the weekly and daily, which come in right around the end of May and beginning of June. That is suggestive that a very important bottom is coming in the gold market. And that is our gold quick pick. Are you going to get ready for what is likely going to happen in a big move to the upside in the gold and precious metals markets? All right, thanks for watching that quick pick. And now we're going to move quickly into a great announcement. This is the askSlim Futures Hub. And we're in beta, and I'm going to let Matt tell you all about this.
Hello, fellow traders and technical analysis enthusiasts. This is Matt with askSlim. Okay, in this brief segment, I am excited to announce our new askSlim Futures Hub service, which is now in beta. With this new service, you'll be able to access the askSlim weekly and daily cycle analysis in 26 major markets, indexes, treasuries, currencies, metals, energies, foods, and crypto. At a glance, you'll be able to see vital technical conditions regarding timing, key levels, and momentum. Our goal with this was to help you experience a more convenient trade planning process. The new Futures Hub brings together our core analysis and all in one place, our charts, our videos, and our key technical details. This is available for level 3 and higher. You can write to me at Matt askSlim for special trial offers. All right, come with me for a moment. We're going to take a look at the hub. All right, here it is. On this page, you see again, we have our indexes, our treasuries, our currencies, metals, energies, grains and softs, and crypto. How this works is you simply click on the symbol of interest, and that pulls up our technical overview widget. In that widget, you have our weekly charts, our daily charts. You can click on that to view an expanded look at those. On those charts, it has our cycle analysis, and it has our key projections along with that. Jump back over to the hub. On that technical overview grid, you also have access to our video analysis. So each week on Wednesday, we produce a video review of these futures markets. And then what we do is we create a hyperlink so that you can easily access that analysis for that specific symbol exactly at the moment that we start talking about it. So that is brought to you inside of the new Futures Hub in our technical overview section. And then we also include our technical details, which gives you a directional bias based on our intermediate cycle analysis. We include our cycle low dates for weekly and daily timing. We include our weekly key levels where there's our cycle low supports or cycle peak resistance. We let you know if there's been breakouts or breakdowns. And then we have our daily key levels with the same information in terms of where the cycle low supports are or the cycle peak resistance. Very excited to release this new Futures Hub. We have great specials available now. Come check us out, Matt at askSlim.com, or go to askSlim.com and click on the link at the top of the page. We're excited to have you check us out. All the best.
Wow, that is amazing. Our development team did such a fantastic job on that, and we're in beta right now. We're going to keep growing that. Just for clarity, you can become a premium member. That's level 1 through 4, and you will be able to use this Futures Hub for the whole month of May. And then you will get a good feel for that. Now, after that, it'll be level 3 and 4 only, but we're inviting in our level 1 and 2 members to be able to use this. So just fantastic work by our development team. Stock market analysis, well, that's coming, but first, I want you to see our analysis and huge content. So take a look at this special. This is a special trial offer for level 3. This is our education, analysis, and support for traders and active investors. 10 reasons to become a level 3 member. Right now, take a look. And there is a special discount going on for 1 or 3 month trials for our first-time users at this level. And I want you to see exactly what these 10 reasons are. Number 1, you get our Slimulator ranking system. These are custom algorithms for our best 84 traded symbols. You can sort on it, get directional bias. with a 3 to 6 week outlook, 3 time frames, and all of our charts on there and so much more. Number 2, the daily trade ideas, educational video in each one of those on turning our analysis into trade planning. Amazing in there. Our directional bias, in other words, how correct are we on the direction on those? Those trading ideas, 72%. It's absolutely fantastic. Stock index report daily snapshot, technical analysis on the indexes every single day. You'll get our SIR live stream. This is for day traders and scalpers, intraday live. You don't need a special platform for this. And it has key levels there: support, resistance, acceleration zones, and our reversal scout. You will get our chart streams live. That's amazing. S&P, QQQ, the IWM, and gold, silver, TLT, XLE, all of those with our proprietary indicators, 4 different time frames. These are designed for short-term and swing traders in there. That's the first 5. You'll also get our Slimulator Momentum Tracker with over 1,000 symbols for active traders. You'll get our video library, over 600 videos in 10 categories. Our new cycle analysis timing tracker. You get it alerted in advance of periods of likely big downside risk, and when lows are forming, and continued advances, and when those are likely. And you'll get unbelievable. The Discord server, you connect with the askSlim community of traders and our team. There's so much that goes on in there. RV holds office hours live on there a couple times a week. And you're going to get our new Futures Hub, which Matt just showed to you. This hub brings our core analysis all in one place on futures. Charts, videos, key technical details, indexes, treasuries, forex, metals, energies, foods, and crypto. All of this, oh my goodness, what I'm showing you, 1 month, 50% off, because we want you to get a good feel for all of this. That's only $59.50 for 1 month. Or you could take a 3-month trial and save more. You'll actually save $157 from the monthly rate. That's 3 months, $200.25. That's $77.33 per month. Unbelievable. We want you to do this because we want you to get such a good feel for everything we bring. That is our level 3 special, and how can you beat that? Here is the stock market. Stock market, S&P 500. The multiple time frame analysis that I'm going to show you right now is really available to our level 4 members. I want you to be sure that you understand that the charts that I'm showing you now are uploadable for our level 4 members, and also static versions of them seen by level 3, and some of them available to our level 2 members. This analysis, I think you're going to find very compelling because it is really very deep analysis. So let's take a look here as we look at the S&P 500 SPX. And the first thing I want to cue you in on is this COVID bubble that was in here. This big rally from way over here, which brought the S&P 500 up to, the stock market, depending on how you measure it, up to around 200% of GDP. Now, most of the other peaks in the market, when you look at the bubble in 2000 and you look at 2007, all of those, of course, Fed created, they got up to 157%, 130-something%. This was 200%. So this was pure insanity, getting these levels up there. And you saw the stock market, those groups that moved it up get absolutely crushed. And that is, I think, an important issue for the stock market, that the important market movement in here that has happened in these stay-at-home stocks, and those stocks that drove the market up, they've gotten crushed. You look at ARK, ARKK, the innovation fund that, has gotten just annihilated, and they're losing, well over 60% of its value, and probably getting worse. And so many stocks in that category down 70, 80, 90%. So what we're looking at here is the cycle analysis, of course, and I want you to see right in here the cycle rhythms that are in the market. Now I'm going to bring this in a little bit so you get an idea. I want you to see the minor thirds that are in here in these cycles. So this big cycle that you see right in here made up of 3 parts. This is the dominant cycle, and in this harmonic family there are 3 visible thirds in there. These green arrows are showing you where each of these minor thirds bottomed. Now, in a bullish market, the minor third is going to bottom above the previous one, as you can see. And when a market turns bearish, it will bottom below the previous one. And you can see this one in here below that one. Now you can see this one in here, which was the first third, is a horrible thing when that happens. That says that these next 2 minor thirds are going to make lower lows. That is what the highest probability is. But what I want you to see is that where we are right now is that these green arrows are showing you that a minor third is due right over here, and that you're likely to get a bottoming and then a rally. And each of these, brings good upside moves. I would expect it about 3 to 5 weeks on the upside in here, and getting up into these resistances. So the first resistance right over here is around 42.80, and this rebound we had this week got through there. So it really says that to the 50 or the 61.8, those are those 2 projections that you see right over there. That would take S&P up to 43.50 to 44.20. That would be the rebound target in here in the next 3 to 5 weeks. That's, of course, a pretty extensive upside move. So when we look at, of course, these bigger pictures, and in a very bearish market condition such as this is, we are going to, look at what the probabilities are of all the market swings. I want you to see that, looking at this bigger picture, after this rally, it's likely the next low is going lower and the next one after that. August to October is the nested bottom period, and likely significant low timing range worth a sink in all of the indexes. So all of the indexes look like there'll be a low between these 2 time frames, which are August to potentially September, maybe October if it got extreme. If you look at the bond market, when capitulations come, they last a long time. They run way past this time frame. So this could run longer, but I think the average time period would be taking it down into September. But this, you can see, is a spot for the market to rebound. So what I'm going to do is take you through our proprietary indicators, and you'll be able to see them. The first one to look at here, of course, are the cycles, which show you that the market will rebound and then move down. I want you to see in here the askSlim Reversal Scout, which is our momentum indicator and gives good signals regarding these cycle conditions. And this cycle is negative. You could get this rebound in here and not even turn this back up. And I would kind of expect that would happen, that the negative momentum will stay in condition. This is the weekly chart. This is your daily chart. And look at these phenomenal cyclical patterns in here. For those of you that are students of the market, you will see in here that there is a dominant cycle right there. That is a 36-day cycle. There is a minor cycle in here that makes up the minor thirds. Now, you don't always get minor thirds. You get minor halves, you get minor quarters. It depends on each individual cycle. So that's running about 12 days on average. This was 12, that was 12, but this was 10, and that was 10. And you're maybe getting a shortening going on in here. Of course, I'll tighten this up and you'll be able to see what we're looking at there in this cycle. All of these yellow areas are the areas that signal where the largest declines could come, where these nesting areas are. And this is a intermediate 24-day cycle, which was very strong going back over here. It now seems to be losing some of its power in here. Now, what I want you to see in the shorter term, as we look at this S&P 500 daily analysis, is that we have had in here a note for quite a while, for a number of days, that the suggested decline would be a time frame between May 3rd and May 10th. And you can see where we are now, right in the middle of that. Now, this low right over here that we had 4 or 5 days ago was a little bit lower than this low right over here. Now, either this is the low here on day 10 or this is the low here on day 14. This being the low here is kind of a more bearish scenario. This being the low here gives it kind of more room to go up. And any way you look at it, this is a very choppy period likely in here. And again, this is a little bit different than the weekly 4280 where it already got up to this week and past. 4350 and 4420, those are the numbers we're looking at, and this is the sell zone for it likely to go down. Momentum in here I'm going to show you in a moment, but I want you to see down over here, this that we're looking at here is the option bias indicator, and this is a great indicator for directing your option positions. There will be warnings in here that you get that the market is likely to begin a rebound that we got in here, but when it's basically red to orange to light red, it's telling you bias your option positions onto the short side. Here where it turned green, it said, well, you could start to do something differently, but then it went neutral again here, and now it's been red all of these days and telling you your option position should really be biased to the short side. This may turn green in here for a while, it may not, but you get a good idea of what's going on. And again, looking at this daily chart, and I'll just tighten this up a lot right in here, this is the time frame for this to be making some kind of a bottom and getting ready to move to the upside into that sell zone. The next thing we'll look at in here is the slim ribbon and slim ribbon PO momentum conditions. This is on the daily, and this tells you when the conditions are positive and when they are negative or neutral. If I go further back in here, right now it's set to 6 months, but if I go to a longer time frame and go out to 1 year, this will show you the time frame when the market was moving up so steadily. And you can see in here when the slim ribbon PO is green and you get these upward arrows, which are momentum upside resumption signals, the market keeps moving to the upside. Now, the slim ribbon PO is a proprietary indicator only for our level 4 members. Now, if you look what's going on since the market has turned down, you can see in here when it's red, the market has a lot of risk, and when you get the down arrows, that's when it's telling you there's a momentum resumption coming on the downside, and you can see that right in here as that happened. That happened here again on April 21st. It happened here again on May 5th, which said to you that the rally that you got on Wednesday was likely going to fail. And of course it did, and this is still very negative condition. This is the slim ribbon, and when it's wide, we're widening, it's really negative. So what we looked at here on the daily chart for the potential bottom, the reason it will not have an easy time is because both the intermediate and short-term momentum conditions are still quite negative, and that's why we don't expect rallies to be able to hold and it be a very choppy time. So there's those momentum indicators again. For those of you that are short-term traders, you can see the same thing right in here where you're looking at a 2-hour chart and how this has basically been negative. The slim ribbon PO telling you bias your trades to the short side. This is the dominant information. Now it's starting to get neutral in right here, but it went negative again. This is the market condition indicator, which is just a fantastic indicator, and it tells you, well, as you get between the 25 and minus 25, once you cross under the minus 25, it's negative. And it tells you that the longer term conditions are weighing on the market and that rallies will continue to fail. And you can see it got down here almost to the minus 100 level. It goes between 100 and minus 100, and right now it's trading at minus 87. It is a very negative condition, and that warns you that rallies will still continue to fail. This again is a level 4 proprietary indicator. So going back really quickly for a summary here, oh, that was the wrong one. Bottoming due here on the intermediate, but momentum conditions negative. We expect a rally and a failure. This is the daily chart that looks like that. It's groping for a bottom as it's thrashing. This is the momentum conditions on the daily. which are still showing negative. They really need to repair themselves to be able to hold any kind of a rally. This is the 2-hour. This is the first one that will turn green or positive out of all of our indicators and give us a sign that that bottoming is in. That is a look at the stock market, multiple time frame analysis with our proprietary indicators, and a little bit more to say about that. I want you to we have this level 3 trial going on. Go to the top of the website, and there's a link on there to click on, and you can sign up there, or email Matt at askSlim.com for this info on this fantastic level 3 trial that we're running, and just all of our fantastic information that you will get special for 1 month, just $59.50. Or for 3 months, $200. That's only $77.33 a month. It is fantastic. So I want to make sure that you go and sign up for level 3 so you can get all that great information. That's it for today. I hope that you found this to be incredibly valuable to you. We want you to be so careful out there because it is so crazy. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been